Hey everyone, in this video I wanted to go through some important financial metrics from SoundHound AI, including its cumulative subscription backlog, how it's digesting the Sync 3 acquisition, and the impact it's having on its margins and revenue. So without further ado, let's take a look at the details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the company saying that in the first quarter they saw 80% year-over-year growth in their cumulative subscription and bookings backlog, up to $682 million with an average duration of about 7 years. That's remarkable when you consider its revenue in the latest quarter was around 10 million, and we'll talk about precisely how much it was. But the backlog compared to its current revenue is remarkably large, and that suggests that revenue growth will persist for several years for SoundHound AI, and I think that's one reason why investors are so enthusiastic about this company and this stock. So the company is saying that they incorporated reasonable assumptions about the adoption percentages, with lower percentages applying to pilot and proof of concept customers. So there's a red flag for me. These backlogs, they're not solely based on the dollar signs of the subscriptions. So it's not like one company said, all right, we're going to sign a $100 million deal for 2 years, $50 million in year one, $50 million in year two. These deals are more subject to change, and they have commitments in there, they have minimums in there, they have rising scale options in there. So these are not firm commitments, although the magnitude of the commitments are estimated reasonably according to management. Still, the actual number may come in lower than what SoundHound AI has estimated. It might also come in higher than what SoundHound AI has estimated. It's just something to consider. This isn't a firm number from SoundHound AI. These incorporate estimates and assumptions. But this metric is intended to directionally convey their medium-term revenue growth prospects. So it's just for giving you a direction, a trajectory of where their revenue is likely to go over the next few years. Now, it might be volatile within that range, but management is just trying to convey to you the direction of that range. And in other words, what they're trying to say is our revenue is likely to move higher. It's likely to move higher. They're trying to convey to you that where their revenue is now, it's going to be much higher 2 years from now and 4 years from now. All right, speaking of where their revenue is right now, in the first quarter, 11.6 million in revenue, and that was up by 73% year over year. That was down from the 80% growth rate in the previous quarter, and it makes it look even worse because it incorporates $3 million from the acquisition of Sync. So they're including $3 million from Sync into their results. Without the acquisition, their revenue would have been approximately 8.6 million, which would have been considerably slower growth year over year. Still, auto units and cloud users both expanded strong double digits in the quarter, and they're seeing meaningful opportunities starting to be realized for accelerated unit price expansion. That's what I really want to see from SoundHound AI, is increasing price, because they're generating losses on the bottom line. They need higher prices to make the business more sustainable. Whatever prices they're charging right now at the current scale is not enough to generate profit. They did say that in a couple of years they will be profitable on an adjusted basis. Still, I'd like to see that happen sooner rather than later, given that the company's been around for 20 years and it's still not profitable. Given that much time, I feel like a business should find a way to be profitable, unless you're not really focused on profitability, which is what it seems like with SoundHound AI. If you were focused on profitability, in 20 years, you would have found a way to be profitable. So they signed a multi-year commitment in the TVs and devices category, and they saw strong double-digit growth from devices. Yeah, growth is excellent for SoundHound AI. But their gross margins fell in the first quarter due to the fact that from the acquisition of Sync has a lower margin call center business. So they're acquiring a business that has lower profit margins. And so that call center business does pressure their profit margins in the near term. However, SoundHound AI is excited about what this new capacity can do for broader business opportunities and for the valuable training data it provides to its AI models. Still, the company thinks that its gross margins will improve throughout the year. So first quarter gross margins were low. They expect it to be higher in the next quarter and higher in the following quarter and higher in the last quarter. So it's going to have an upward trajectory throughout the year. And that's good news for SoundHound AI stock investors. Now, the company is investing to accelerate the training and deployment of large language models to provide even more value to customers. And I think that's what investors like to hear. Large language models are highly demanded right now, and that's a category that SoundHound AI has a competitive advantage in. So it wants to push in that category. It's good to hear they are investing in this category because they've got such strong demand. You saw the backlog numbers, revenue growth of 73%. So it makes sense for them to invest in training and deploying these models given they already have such strong demand and growth is accelerating so nicely. I would still like SoundHound AI to employ some cost discipline, which remember in 2023 and early 2023, they did a really good job restructuring the business and cutting costs. That led to nice margin expansion in 2023. And then now with the acquisition, of course, every acquisition is difficult. It's not an easy thing to digest a whole company into your business, right? It's not as easy as just saying, okay, you tell your people to just show up at our office on Monday. It's not that easy. There's a lot of redundancies that happen. You've got to go through and analyze who you're keeping, who you're not keeping, which office space are you going to employ? Are you going to cancel? Are you going to keep the lease on the other company's office space? You may not be able to exit that lease immediately. Are you going to pay to get out of that lease? And so a lot of decisions need to be made. And in the near term, an acquisition is usually difficult for a business. It usually leads to difficulties in the first few quarters of digestion, especially if you're not experienced with acquisitions, if you're not a company that's been, acquiring regularly over the several past years, then you're not going to be very skilled at this just yet because you don't have that experience. So it's understandable. There are some merging pains here for SoundHound AI, but it's also encouraging to see the company has identified the areas where it can improve and has identified that throughout 2024, the gross profit margin will accelerate throughout the year. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.